Hello, Jesse here once again with Bullish Banter. I'll be joined again by Rufus Kamau. I hope you have been good.
Yeah, pretty good.
Okay, since the last time we had a conversation, the dollar has sort of stabilized.
Yes.
Okay. Do you think maybe the markets are reacting to the news and all the policy measures implemented specifically to alleviate at least the high prices in the dollar?
I think the announcement from the president was pretty clear.
Okay.
So drove some optimism that the cash shilling will recover.
Okay.
Yeah.
Now, in the last couple of days, we have had significant central bank announcements, yeah?
Yes.
Not only to address the financial and dollar crisis within the G7 and the Western front, but also to address the inflation. What is your take, at least on it, in terms of the short-term and long-term effect on their respective currencies?
I think the act of the US
Yes.
providing more liquidity
Yeah.
is bringing some hope.
Okay.
When investors are making decisions,
Yes.
their playbook is about what they think about the markets.
Okay.
So if they think the dollar is coming back,
Okay.
then they try to buy the other assets.
In terms of the base lending rates, at least for Fed, increased it to around 5. Also, UK also increased it. Do you believe in the coming months, at least within the respective central banks, there will be further hikes?
From what we heard from Powell on the last meeting,
Yes.
and also what we heard from the Bank of England, they're looking to continue the tightening.
Okay.
So while inflation has really gone down in the US, last reading at 6%,
Yes.
for the UK is still very high at 10.4%. So I expect some more tightening to be happening.
It's good that you've mentioned about inflation. I think the last print on CPI from US came down to 6.04, but rather the inflation is disinflating. I think that is the right word.
Slowing down.
Yes.
Yeah.
So you believe maybe with the current measures and the scare we are having within the financial crisis will not really spike it again?
I'm not very sure. See, these guys are using a lagging indicator.
Okay.
So when you look at the CPI
Yes.
and how they estimate inflation,
Yes.
they look at what happened last month.
Yes.
So they track a basket of commodities
Yes.
that are commonly used by the average household.
Okay.
So this would be the average cost of food, transport, housing, healthcare, and all that.
Okay.
And then they compare that 1 month over the other.
Okay.
So when you see the inflation data, let's say the one that came in last week,
Yes.
it's reflecting what happened on Tuesday.
Yes.
So if you're trying to...
on February, I believe, not?
On February.
Yes.
So if you're trying to control something that is way ahead,
Okay.
then it becomes unpredictable.
The reason I'm saying I'm starting there is because today we are talking about fundamentals versus technical analysis in trading.
Yes.
And I believe every trader at some point you'll be told, check on the economic calendar, right?
Yes.
Maybe in simple terms, how do these fundamentals affect your trading decision and, of course, your formulation of a trading strategy?
Yeah, let me explain. So when it comes to trading, there's 3 main approaches.
Okay.
So the very first one and the very basic one is what we define as technical analysis.
Yes.
So technical analysis is way simpler. You're looking at a history of price action. So if you're looking at a stock, you want to know what was the price last week, what was the price last month, what was the price last year, and trying to identify the trend or the direction that the stock price is going. You want to know the speed of that price, whether it's increasing highly, whether it's increasing slowly, reducing, and so on.
Yes.
And several other features about that price.
Okay.
So when you study that price action, you're able to tell a story that, let's say this year we have been in a bear market, the price has pulled back to this level, and you're trying to speculate on the price action based on that past price action.
Okay.
So on the other hand, when you look at fundamental analysis, you are trying to understand the factors that influence the demand and supply of that asset.
Okay.
So if that asset is, let's say, the US dollar,
yes,
there are factors that influence the demand and supply of the dollar. For instance, if the central bank of the US decides to raise interest rates, then it creates some level of dollar scarcity, which strengthens the dollar. So you're trying to understand what would prompt the participants in the market to buy more dollars or even to sell more dollars.
I believe, I don't know if it is true, previously technical analysis was referred to as mechanical analysis. Where you'd go to you'll get the ticker price, at least printed out, contact your broker, and then you do your analysis. Yesterday it was 2 cents. Today it's 4 cents. Tomorrow it's whatever price it will be. And you have been educating a lot of traders over that period of time. Given technical analysis, you say it is easier. Do you begin with that, or do you begin with fundamentals?
I think for any trader out there who is looking to start trading, or you've just recently started trading, it's very important to have an all-round understanding of how the markets work. So it's a mistake to prioritize one over the other. In my experience, you should try at least have an understanding of both.
Maybe let me try and rephrase the question. Like, you want to trade something like gold today, right? And gold has been hovering around $2,000 per ounce to around 1950, 1930s at some point, right? So given in a particular day, let's say CPI is coming out, right? Or even, let me scratch that. You want to trade today. So you'll check out the technicals first, ama utaangalia what is happening in the fundamentals, and then now come to the prices.
So let me give you an analogy. So let's say you're driving a bus. You're driving this bus along a road.
This is going to be
but
good.
You've never been on this road before. So this bus requires fuel. So you fuel, and then you drive to an unknown destination. So on one side, you don't know what's ahead of you. You don't know where the next petrol station is where you can refuel. So if you compare this analogy with trading, then the fuel would be the fundamental analysis. So you're trying to understand what is moving the bus, what's the driving force. So fundamental analysis is what actually drives the markets. So when you see a stock going up, it's because there is a fundamental factor that is influencing people to have more positive view of that stock and to buy that stock. But then the direction that the price of that asset takes a route that we have not encountered before, but we know that history rhymes. So you know that roads have very common features. They have roundabouts, sometimes there is a bridge, sometimes there is a corner, and so on. So in technical analysis, you try and study these patterns so that when if you have gone through a bridge before, you know that every time I encounter a bridge in future, then there is a certain distance where the road is a straight line. And in that case, you can take advantage of that based on what you have observed in the past.
To go on with that analogy, I think the corners are like the Kerio Valley. In trading, that would be the resistance and support levels.
Definitely.
And then the straight line is the trend line now. Maybe our listeners can chime in on the comment section, be it on Twitter, Facebook, and all the other socials. Add your questions and comments, or even your analogy of how you, especially for educators, how they go about this one.
And sometimes your bus will run out of fuel. You go back to the nearest petrol station.
And that would be ranging markets, right? That would be ranging market. Another thing, sometimes like on this week, as we record, that would be around 28th, the week of 28th of March. There is limited high impact events. And therefore, it's like we are in a curve. The markets are basically just ranging. I think it's only on 27th when we had a spike in oil. Now, there is another aspect of news which is not normally covered within the economic calendar or the typical economic calendar. That is the macro. I like to call them macro because there are things you watch on CNN, there are things you watch on CNBC or the other news, or even Bloomberg. Let's say there is an oil crisis or an tankers exploded. How does a trader, probably new, maybe has done, let's say, a month or two now, he or she is familiar with the
Yes.
fundamental analysis, right?
Yes.
How do you digest such news to put it into an action plan?
Whenever there is, let's say, news that changes the perspective of how people think about a particular asset,
Yes.
It starts with the belief process.
Okay.
So the only reason you'd be holding, let's say, Apple shares
Yes.
is because you believe that that company is it has solid books, and it's going to move higher.
Okay.
So the only thing that would change that belief system is some form of news that changes that belief. So if, for instance, let's say China bans Apple products. So the Apple is no longer able to sell its products in China.
And that's a 1 billion market.
Yes, that's their biggest market.
Actually, multiple billions. Yes, that's 1 billion people.
Yes.
They might be buying several iPhones, so you never know.
Yes. So it's a logical conclusion to just look at the news.
Okay.
And then you will see this is how the company will be affected. This is how the margins or the sales revenue will be affected. So the business is no longer viable to reach, let's say, my price target of this number. So in that case, you react immediately by shorting that stock.
Okay.
So understanding fundamental analysis is a mere logical process of understanding how an asset is affected.
Okay.
Yeah.
Previously, we have talked about something which I see it creeping, and it was significantly mentioned by Andrew Bailey, the Bank of England chair, whereby I think he was addressing the London School of Economics. As much as there is some crisis within the financial markets, it has been exacerbated by social media spreading of information.
Yes.
Because I think previously, until you see a long line in the banks, people wanting to withdraw, you would not know that this bank is running out of liquidity.
Yes.
But right now, there is that social media information spread, whether right or false. And it has been occurring, of course, lately within the Twitter spaces, especially, whereby there is these research agencies.
Yes.
They do in-depth research, maybe 2 years,
Yes.
and then they post it, and it is sort of a short recommendation on a company, right?
Yes.
So as a trader,
Yeah.
should I, let's say, be following this information and applying them?
Yes.
Or because some of them have been debunked, that some of them are not right, should I act on them instantly? Or let's say take also an initiative myself to look at the company itself? Is it really logical in what they are saying? Does it make sense in terms of my long-term investment and short-term trading?
Yeah. So the thing is, it's not a fair game. It's tricky business.
Yeah.
So you remember some time back when we saw on the news that KRA is looking to integrate its systems with M-Pesa. So that simple piece of news caused a lot of panic in the markets. Then the following day, we had unidentified billionaire had bought a lot of Safaricom shares at a very cheap price. Yeah. So those games get played every now and then. An investment bank looking to acquire an asset will sometimes even share some bad news about a certain stock. It goes down and then they accumulate at lower prices. So you have to be very vigilant about the news you are reacting to in the markets, whether they have a fundamental long-term effect on the asset, or whether it's just short-term news to cause some panic and then the price recovers.
Definitely. It's good that you've mentioned something along that line. And I was thinking something. There is this show, and I know a lot of traders or investors in general like to watch something, even if it is fiction, within their industry. Bob Axe, or Axelrod Bob, depending on how you refer to him. In the show Billions, they do a lot of, anticipation and reaction. For example, there is an episode where there was an earthquake somewhere, and definitely it would affect the supply of oil from a certain price. So what did they do? Short the price. As a trader who is probably going about your job, you're a doctor, you're a military person, or even more importantly, you're a teacher. You cannot be in class and then you have, say, a Bloomberg alert. If there is an earthquake somewhere, I will go and short or buy JPY. So how do you balance between reacting to those newses and actually your trading journey?
So when it comes to news in the market,
this macro news at least.
Some traders are very quick to react to news in the market. And while some other news take some time to get into the full picture.
Yes.
So, for instance, there's the issue of potential recession in the US. So, the market has not fully priced in that yet. Okay. So, if you do your research properly, you still have a chance to take that position within a week, a month, or even a couple of months down the line.
Yes.
So, there's no like specific time when you're supposed to react to the news. Okay. Some news are long term, and it doesn't matter whether you are early or late, as long as you take advantage of the move.
Basically, on the other hand, you're on the straight line.
Yes.
So you can hitch it anywhere along that line.
Yes.
Let's say on the pit stops.
Yes. But then if it's an urgent or breaking news, some kind of news that happens instantly,
yes,
then you definitely need to be there in the markets when it happens.
Okay.
So if you're not there, then you basically miss up on the opportunity.
Good that you mentioned. So I think those who are not necessarily finance background,
yes,
maybe you can challenge me on this theory.
Yeah.
I always tend to think they do better because they are not tied to the logics of economics, right? You just see some news, you go to your chart because you're so good at your technical analysis.
Yes.
You know how the markets might react and you're able to catch that ride to wherever the price will go.
Yeah.
Do you believe in that theory whereby finance background people maybe sometimes tend to suffer from overthinking?
It's a feature.
Now, this is on trading aspect as opposed to the long-term investment.
So if you have a financial background,
yes,
it's a feature because it's you already have that information in you. So you try to overthink and go to the nitty-gritties of how the market will react. But then the other guy who doesn't have a financial background, he sees things as they are. So there's this big news happening in the markets.
Yes.
He's looking at the charts. There's an opportunity. They take it.
Yes.
So I think it's more or less about being on the process.
Okay.
So when you see like those small birds that fly in some funny patterns, sometimes they form a V, a W-shaped pattern.
Yes.
Yeah. So the way they turn, when the first bird on the line turns,
yes,
they naturally turn automatically because they are in tune with the flow.
Okay.
So any trader who is in tune with the direction the market is taking, every time the market takes a turn, they're able to turn quickly.
Okay.
But the finance guy might take some time rethinking about it, and they will fly out of pattern.
Okay.
Yeah.
Now, I think we have covered significantly the essence of fundamental investing, understanding how it impacts the prices in the markets, right?
Yeah.
Technical analysis.
Yeah.
What are those, let's say, qualities or features that you need to possess so that you analyze, let's say, whatever price you want to get into a trade in an efficient way, and more importantly, you're able to get into a position at an optimum price or a discounted price?
I think the idea about technical analysis is based on price patterns that tend to repeat themselves over time. Okay. So the most basic skill that you need to at least have is understand price action. And by price action, I talk about candlesticks. Okay. So you need to understand candlesticks. You need to understand the trend, support, resistance levels. Okay. Once you understand those, then look at the price patterns that repeat themselves over time. Okay. And then study their probabilities.
Do you like alter the time frames or?
Yes, definitely. So you test them on 15 minutes time frame, test them on 1 hour, and see which one works best. Okay. Then once you have identified how the patterns play out over time, then look at the probabilities. And this is what we call backtesting. So if I'm trading, let's say a triangle pattern or a head and shoulder pattern, if price reacts by moving in this direction, and if I traded this asset for the last 1 year, 2 years, or 5 years, then I would have these winning trades versus losing trades. Okay. So that builds conviction. Okay. So once you understand how the pattern plays out, then trading it forward, you'll have that conviction that if I keep doing this, then there's a good chance I'll be making money since the probabilities are working on my side.
I think it's fair to mention, and I believe in your interaction with a lot of traders, there is always this question, which is the best time frame? What is the best time to trade? Yeah. What do you normally answer to that? And why? What informs your decision or your opinion that on whatever answer you'll give?
Yeah. So let's say you want to buy Tesla shares right now.
Yes.
Okay. So whether you're looking at the 1 hour time frame, whether you're looking at the daily time frame, 1 month time frame, you're looking at the same price.
Nice.
So when you're trading, you trade price. You don't trade the time frame.
Excellent. Excellent
so
point.
The other thing, when you think of time frames, we are looking at candlesticks. So you are looking at a price action summary as per a predefined time.
Okay.
So you want to know the summary of let's say Tesla shares.
Yes.
In the last 1 day. You can look at one candlestick telling you this was the open, high, low, and close. Or you can look at 24 candlesticks telling you this is what price did in the first hour, second hour, third hour to the 24th hour.
Okay.
So it's only different perceptions of price action.
Nice. I think this would be fair to allow the audience actually chime in.
Yes.
And I will be expecting at least some questions, at least post this session or this episode out there. Maybe now to something else, now the political news.
Yeah.
Politics definitely play a lot. I remember when there was the Brexit saga for almost 7 years.
Yes.
The market really hammered a lot of traders, while some actually milked a lot.
Yeah.
Then we came into the Trump era.
Yes.
Another hammering session. You would basically set I don't know about you, but for me, I did set a tweet for Trump alert.
Yeah, I got hate one day. It was an early morning.
Yes.
And then Trump just woke up one day and tweeted something about the Saudis manipulating oil prices higher.
Yes.
And oil fell massively. And I was disgusted. Like, this guy is influencing the markets from a tweet. You know, it was crazy.
I think that was one of the most interesting periods within the financial market, especially in terms of political impacts to news.
Yeah.
I believe political news also fall under fundamentals most well, right?
Yes. But so, as I mentioned, in fundamentals, these are things that influence the demand and supply of an asset. So sometimes it can be a politician who says something that influences a stock. I remember the CZ, the Binance guy, tweeting about FTX, and then immediately the stock went down.
Definitely. Yeah. So what did you learn at least from the political side of such tweets? Because I know they do play a lot, and currently, we have all this West versus East trying to muscle each other against what to use in terms of oil purchases, be it dollar, yen, and everything. How do you balance between the political impact and now, of course? Yeah.
So if you are a short-term trader, let's say an intraday trader, there's always that number of specified people who can say something and it has an effect in the markets.
Okay.
So you follow them closely.
Okay.
As a Forex trader, my number one guy is always Jerome Powell. Because if he says something...
Or the Fed.
Yes.
The federal Twitter handle.
Yeah, but the Fed chair is more important.
Okay. But this chair is not really active within the social media, right?
Yes. So his meetings are usually predefined.
Okay.
But then we also have the U.S. Treasury Secretary, Janet Yellen.
Okay.
So if she says something, it has an impact in the markets.
Okay.
So sometimes I will follow that. So if there is a number of people, let's say 5 or 10 guys, that whenever they say something, it influences the markets, then it's within your interest to follow these people closely, especially on Twitter, because any thing they say can influence the market, and you can take advantage of that.
What about this guy? This guy has been quite... I believe there is actually an ETF named under him. Yeah. Jim Cramer.
Nice. So Jim Cramer has been this guy who he runs a show on TV.
Yeah.
It's called Mad Money.
Yes.
He will literally try to explore, explain what's currently happening in the markets.
Yes.
What are we expecting to see in the markets over the next day or over the next 1 week?
Yes.
So traders have developed this index called Inverse Cramer. In fact, it was registered this year.
Yes.
Mainly as a result of the effect they have been observing over the last couple of years, where whenever he mentions a stock or recommends a stock, then it goes in the opposite direction.
Okay.
If he says sell, the asset goes up. If he says buy, the asset goes down.
Okay.
So as a result of that effect has gained popularity. Well, on one hand, you might think that he has info about the markets.
Okay.
It's almost like the reverse.
Okay.
Where he says something and it becomes a self-fulfilling prophecy because people are reacting to that.
Now, do you find yourself in such a situation?
Sometimes.
Because I know sometimes you refer
Sometimes,
something
yeah.
and then not you refer or even recommend,
Yeah.
but you have a view and a personal opinion on a certain commodity, stock, or even asset class.
Let me give you a quick one. Nvidia is up over 80% year to date since the beginning of the year.
Yes.
So today, this evening, let's say you hold some stocks, some shares in Nvidia.
Yes.
Then when you're watching the news, Jim Cramer says Nvidia is a really good company. I expect it to double in the next 1 year. What do you do?
Well, the bullish definitely turns into a sort of a very strong big bear falling down.
Yeah. So
definitely.
How do you react?
I think personally, I would bet on the fundamentals of the company as opposed to speculators in the markets.
Yeah.
Especially if I am invested, not trading.
Yes.
I believe it's very important to mention that if I'm trading, I can definitely take that short position, cover my position, right?
Yeah.
But if I am investing, I would take advantage of the discounted price if the fundamentals actually dictate this company is underpriced at the moment, and I believe the share price will appreciate over time. That is just me.
So inverse Cramer is a big movement right now.
I believe it doesn't run any company insolvent.
Yeah. Okay. So if he mentions a stock that I'm holding, I'm definitely taking profit.
Definitely.
Until the storm comes.
Okay. I think that has been a good session, and should we not have covered anything, especially on the technical side, it's always good to have the chart patterns, right?
Yes.
So any listener out there, make sure to follow Rufus on YouTube, especially on the market snapshots. And what is the other one?
Market Pulse.
Market Pulse every...
Market Pulse on Thursday, 8 p.m.
Okay.
I'm also doing Markets at a Glance on Tuesday, 4 p.m.
Definitely.
Then Market Snapshots Monday to Thursday at 11 a.m.
Yeah. And of course, on Twitter, you'll definitely be sharing the fundamental aspects. Other than that, feel free to add your comment, share the episode. Let us know what you'd like to address in the upcoming sessions. Good day ahead.